Good morning. I'm Eddie Sunlergy, and welcome to your Finance TV's Crypto Revolution, covering all things crypto and digital assets. We are here with Adam Blumberg, co-founder at Interaxis. But before we get into it, don't forget to like and subscribe to the channel. And that way you'll keep on top of any of our content that comes out. And always feel free to send us a note if there's anything in particular you'd like us to talk about. Adam, it's been a couple of weeks, mate, but we're back and there's been lots happening. You were hiding somewhere in Denver, I believe.
I was hiding in Denver, so it's been an eventful few weeks. But I went to ETH Denver, which is a now become a monster Ethereum crypto DeFi conference.
Well, if that's where you were, why don't we kick off and hear a little bit about what you were doing at ETH Denver?
Yeah, let's do that. The something I noted, because I've been to ETH Denver in the past. I've been there several years in a row, and I remarked when ETH Denver was a big conference when it was like 1,500 people. This year, I think they had 25,000 people come in. They had to move it to a venue that they usually use for the rodeo in Denver. So it was enormous. Just the size and the scope and just the number of people that were there was huge. I said it was almost too big. I could hardly find people in there. But the reassuring part, of course, is even with this crypto bear market, even with VC funding going down and for crypto and everything, there was still a tremendous amount of building going on. There was just a tremendous amount of positivity of people, media, a lot of people meeting each other for the first time, getting to, hang out, have actual business meetings. How are we going to use your protocol? How does it integrate with something else we're doing? So that was really positive and uplifting. The other thing that was positive for me is the level of the parties was actually way down, which seems wrong, except that in the past, these companies or protocols or whomever that raised a bunch of money spent it all on a party, just like we saw in 1999, 2000, 2001 with the dot-coms. They spent it all on a party in years past at ETH Denver and other conferences. And this year was much more subdued. Right. Like I think in the whole time I was there, I went to one event at a nightclub. Everything else was at, co-working spaces where you could just sit and, chat with people about some of the cool stuff that's being built. So I thought that was a real positive.
And was there? I'm sure there was still some conversation about FTX and things like that, and we can get to that. But was there a sense of growth and kind of, we're still fully on board with this, or was there a lot of concerns around how the regulators might come in harder and put the kibosh on things?
There was very little talk from what I heard from people about regulation. It was much more talk about what we're building and looking back at some of those things like FTX and saying, this is exactly what we're building for. We're building to not be what those companies were. And so there's a tremendous amount of building and excitement around things like new wallet technology that's going to make things easier. You and I believe, have talked on here about the horrible user experience with wallets and about how hard it is remembering a seed phrase and figuring out how to keep all that safe. The new wallets that are coming out, and there's something called account aggregation that we can get into at another point. But these new wallets that are coming out that are going to give me much more control over my own funds that are in crypto are pretty exciting. And then we have there was a lot of excitement around what we call the layer twos. So these are the transaction layers that are built on top of Ethereum such that we can have crypto transactions go much faster and much cheaper. And those are starting to get rolled out and adopted much quicker. So those are the two big positives: is the ways that I'm able to keep, store, and control my money are getting safer and easier to use. And then the ability to actually use that money and transact is getting faster and cheaper. So those two are seriously going to add to adoption. And that's one of the reasons around so much of the excitement. There was a lot less in we're launching an NFT kind of world there. It was much more about what are we building in terms of applications that are going to feed into each other.
That's fantastic. And I feel like that also ties into what we were talking about last time we were speaking, that it's not about the price of crypto, it's about the applications of blockchain and all these types of products that are coming about. And that's where the excitement, the growth, and the future kind of lies. So I'm really glad to hear that that was the focal point of ETH Denver.
Yeah.
Well, welcome back, though. Um, and on that note, I can't, obviously, since the last couple of weeks we spoke, there's been lots happen. Things with FTX have calmed down. I see you scratching your head, but we've seen Silvergate go. SVB is closed, whatever's happening with them. Signature Bank is closed. There was some, we saw some volatility and a bit of a wild ride in the stable coins for a bit. But, all of these things have happened in traditional banking. And obviously, we utilize a lot of these banks for access between crypto assets and the fiat world as well, one way or another. But we've seen, when you could have potentially seen some of these crypto assets really sell off hard on the back of this. Bitcoin actually, I'm picking on Bitcoin because it's the easiest gauge for the overall crypto market. But Bitcoin topped 26,500, which is the best it's done in the last, 12 months, maybe more. It didn't stay there. But I feel that move in itself kind of put a lot of people at ease.
Yeah, I think so. And over the weekend, which seemed like an entire year's worth of cycles we had over the weekend, with what happened with first Silvergate last week, Silicon Valley Bank, last weekend over the weekend, and then Signature Bank, which kind of came out of nowhere on us. It seemed very negative, right? Because what you're doing is you're cutting off a lot of the banking system from the crypto system, which is how we on ramp, which is how I take my dollars and move them into crypto. And we saw Bitcoin go down and everything else kind of tumble with it, with this feeling of how are most people going to get their dollars into crypto, and wondering if the U.S. government is just completely coming down on crypto, which it kind of seems they are. But then there was, a few other factors there that said, one, the government kind of, and I'm using air quotes, came to the rescue of the banks, which I don't know if there was so much of a crisis, but they kind of came to the rescue, which reassured everyone a little bit just in overall the economy and the banking system. But then maybe we have this realization of there's a different system, right? Where I can hold my assets. This is the entire point of Bitcoin when they started. The entire point of decentralized finance is I can control and custody my own assets. Going back to the beginning of our talk, the new wallets that are coming out. I can hold my own assets, and people going, oh wait, all my money in a bank isn't safe unless the government rides into the rescue at the last minute. I was worried about my money, but in this new custodial system in Bitcoin and in ETH, I can actually hold on to my assets and I don't have to worry about that. It's like all the time, unfortunately, we have these reminders of why crypto came into being and why it continues to grow. And it's issues like what is happening in the banking sector in the US, which obviously as of today has moved across the pond into Switzerland and into Europe. But these are the reminders. And you're likely, my guess is you're going to see more businesses, more people that hold assets above $250,000 FDIC limit start to move some of that into crypto because they get to have more control over it. They get to know where it is at all times.
And why wouldn't you? I know there was we historically we'd had a back and forth in regards to corporate treasuries, whether it was necessarily the most sensible way of storing your cash reserves. Historically it was throw it into 10-year treasuries or something like that, and that was the safest bet. But when you're talking about, as we've seen, the limits of $250,000, some of those cash reserves were well in excess of the 250 grand, which we've seen, which obviously businesses need on hand to make payroll, to just for the standard course of business. But why wouldn't you have a portion sitting in a wallet where your institution, we're not talking about small institutions either. SVB Bank had 160, $170 billion in assets and deposits, right? So that's not a small bank. Why wouldn't you have a portion of safety sitting on an off-chain wallet, a cold storage wallet, where nothing can happen to that? It's not going away. It can't be taken or lost in the system by whatever inaction or bad investment advice has happened from a treasury department at your bank. So it almost seems fiscally responsible to take something out of the system and have it in a cold wallet.
Right. Because the alternative, Mehdi, is I have to either I have to completely trust the bank and do all my due diligence on the bank, which people did with SVP. There was very little indication that there was a problem. They had more assets than they had liabilities. All of those things. They would, we can go into it, and I know you all on with I've watched some of the interviews you've had have gone into it ad nauseum, and I'm not going to go into that. But the idea that now I can have my money in a system where I don't have to worry about that. I don't have to worry about the FDIC limit or the government writing in. I think more companies are going to start doing that. I mean, look, most of the ones that are funded at SVB, the VC funded, are very tech forward anyway. So why not hire someone or hire a company to help manage that and go, look, we're just going to keep a sizable portion of these in some sort of crypto asset, and it can be something that's relatively stable. It can be Bitcoin, whatever. But why would they not do that and not have to worry about what's happening with the banking system?
The only concern comes when you look at Bitcoin moves, and obviously it's been up 20, 25% in the last week, 10 days, which no one's complaining about. But I'm sure, if it flips the other way and you're sitting there and you've put your corporate treasuries in and you're down 25% in a week, you then have your shareholders and board members to answer to. So
Exactly.
obviously there's two sides to every coin, but the alternative for a lot of these assets being held at SVB Bank could have been going from 10 million to 250 grand. So,
Right.
thankfully the Fed and Treasury Department stepped in to help that situation, but it could have been a lot worse.
Oh, sure. And I think there's a realization that, look, we're not going to move all assets on chain right now, but it's more and more people waking up and going, oh, that's why this exists. Because for years the naysayers were going, we don't need crypto. There's no reason for it to exist. And I've even said on here in the US, we don't really need crypto. And now I've been proven wrong, right? I've said we don't need crypto. We trust our government. We trust our banks. And I keep getting proven wrong on that, on those notes. So here I am going, we need crypto. Here it is. We're at that point where you need to start understanding how it works, what it means, what custody is like, what instant settlement is like, transparency, all of those things, because in the absence of that, you just have to go, all right, government, bail me out.
You just said the word that rings true on this whole situation: transparency. We have no transparency on what genuinely happened or transpired. Let's keep on the trans.
Yeah.
What transpired between, with Signature Bank? It was shut down. There was very little news around what happened. SVB, we have an idea of what happened. But again, there's no genuine transparency. We can look at things that are happening in Bitcoin and what's happening with one wallet to another. You can dig deep and go see. Obviously, you don't know who owns the wallet, but you can see transactions of size. I think there was something like 865 million was moved during this from one wallet as the market started having a pop the other day. The US government moved $1 billion and seized Silk Road Bitcoin. We can see all of these things and you know what's happening.
Right.
You don't know, again, nuances around who's doing what, which is great. I'm sure you can figure things out when you start getting to these whale-sized wallets. But you do realize that it gives you a hell of a lot more transparency versus what we see in the traditional financial system. And the lack of transparency is what's kind of brought us to where we are today. You don't know how the Treasury departments are investing those funds. Do they have long duration bonds that they've been using to offset the risk of their investments on, are insurance companies the next shoe to drop? We don't know if they're managing their long dated bonds, if they've been keeping up with the rising rates, if their mark to market is going to be a disaster, if they have to refund all these things. We don't know how these things are all going. So at the end of the day, transparency is what it's all about. And you don't
Oh, yeah.
have the traditional system.
Exactly. It's an incredible amount of transparency. As you've said, we saw Bitcoin move in different wallets over the weekend and huge amounts of Bitcoin. Now, we don't know exactly what's happening with it, but we can infer certain things. But the important part to note is that level of transparency. We can look and go 1 point whatever billion dollars worth of seized Bitcoin that the US government has moved to several different wallets. And we can kind of infer either they're trying to sell some, or maybe they're just moving it to safer wallets. Maybe they finally said, look, we need a better multi-sig option or something like that. Maybe they're distributing it to different agencies. I don't know what they're doing with it, but we have that level of transparency. And when you look at things like bank runs, you go, all right, the whole point of the SEC registration and the whole point of OCC registration and bank registration is some level of transparency. The problem is that level of transparency is pretty much on a quarterly basis. It's not on a second by second basis. You wonder if you would have bank runs if you could see the assets all the time. And if you know, because many of those companies that started pulling out millions of dollars at a time did it because you have this prisoner's dilemma that says, I'm not going to be the last one with my money in. And I don't have any visibility into how much they have left. But if I had visibility into how much they had left, I might go, I can wait. I'm good right now with where my money is. And when you have that level of transparency, maybe you eliminate some of that stuff. And like there are plenty of warts on crypto and DeFi right now. But again, my positivity out of all this says we see in unfortunate ways, almost a weekly basis, why there is a need for some of the characteristics that public blockchains and crypto are bringing us. And it's the transparency. It would be things like immediate settlement, Mehdi. Like if you could settle transactions more immediately right away, that changes how books are seen. That changes how banks work, right? You don't have to go, well, I moved my assets on Thursday, but they won't make it to the other bank till Tuesday, right? I moved them and they're gone. They're in my new bank, they're in my new account, they're in my new wallet. So those are the kind of characteristics that we keep seeing the need for.
And we're also seeing that since the FTX debacle, a lot more transparency within the exchange side of things as well, showing deposits versus loan rates and how everything's going on the staking side. Is it 1-to-1? What the ratios are? And as these things progress, people are getting more and more transparency again. That's the word of the day. But we'll eventually get to a level where you will have investors who have that comfort level in dealing with these situations. And it's unfortunately, it has taken something like an FTX to really open up the eyes of, I guess, regulators, Joe Blogs, institutions, everyone go, okay, that's one of the big issues that is around this. I kind of feel better now because now I can go to Coinbase. I can see what their loan ratios are, what their ratio to deposit ratios are. And I can go through all of this data in theory, you can do it in real time, but obviously us as Joe Blogs generally can't, but regulators can.
Oh, sure. And look, my hope is these companies that raise money or have money can go to financial professionals like advisors and accountants and attorneys and get help from someone who knows what they're doing and saying, look, I don't want to keep all my money at a bank. I don't want to have 18 different bank accounts. Can you help me with it? And they might have an accountant that goes, yeah, I'm going to show you how to set up wallets with multi-sig capability that you can store this, on chain. And here's how we're going to keep it safe. And here's how we're going to mitigate the risk. And they go, all right, now like that part is taken care
of. It sounds like a plan. Well, enough around that. Let's have a look at some more light-hearted and again, future of this universe. NFTs. I know I've been like them, hate them, love them, leave them, whatever it is. Let's love them for right now. Amazon seems to be potentially dipping their toe in here and looking to sell NFTs. That's the rumor anyway. This sounds pretty awesome. You're sitting there, you're buying some toilet rolls and toothpaste and buy a couple of NFTs while you're at it as well.
Yeah, I'll see here. I'm gonna hold back judgment here. I tend to not be real excited when some of these monster
you were gonna say
companies get involved, right? I know there's some people that go, oh, well, it validates and everything, but there's still monster companies that can exert a lot of control and they can really change the narrative if they're just selling it, right? If they jump in opposite OpenSea or LooksRare or something, they can really control things. And that worries me, that maybe they're going to, you have to have your NFT stored on Amazon servers or something. Though, just like we talked about at one point when I think Google got into, is hosting nodes or something like that. And I said, I don't really like that news, because I don't like the idea that Google has a master off switch that can turn off a bunch of Ethereum nodes. Same thing. I don't know if I like this all that much. I know it gives some validation and verification to it. And I'm kind of curious as to what Amazon's going to do. I can't imagine they're just going to sell NFTs. I have to imagine they might use NFT technology to track things or to denote certain assets. I can imagine them using NFT technology for, tracking the packages that move around, or tracking certain items through their supply chain. I can imagine them using, maybe selling something that has an NFT attached to it. I can't imagine Amazon just saying, we have an NFT marketplace, come use ours instead of these others. But that's what might happen. And I did see where some of the NFT marketplaces and some of those players have kind of said, oh, this is cool, Amazon's lending some credibility, but let's wait and see what happens.
So how about you have it as an NFT marketplace, and if you utilize the Amazon marketplace, you're issued a fraction of a coin, and those coins obviously make prizes, and those prizes mean that you can buy cheaper toilet rolls and toothpaste, and the whole world starts mingling between the NFT world and the real world. And
NFT toilet paper, I like it.
Yeah.
And NFT toilet
paper. I don't know what the secondary market for that's like.
Hopefully not very good. But what I can see, as you and I are talking about this, is like, I'm an Amazon Prime member, right? My Amazon Prime, and I've gotten to where I can use my Amazon Prime membership to sign into a bunch of other services, right? Same way you can do with Google or Apple or several others. So I could see where Amazon might go, now your Amazon Prime membership is just an NFT. We're going to denote that using an NFT on a blockchain instead of having to keep everyone's account on our own servers. Right, that could be a direction they go. That would actually be a great direction from my perspective, that says now it's an NFT, because what it means is maybe at that point, Amazon doesn't get all my information, right? If I can just connect my wallet and keep most of my information safe, and I can connect, prove that I'm a Prime member, pay for something using a wallet, and then disconnect, then maybe they don't have as much information on me, right? So that's where I could see Amazon utilizing NFTs, that I think would be a great way, and actually one of the ways that NFTs should be used.
I kind of like that. And that rolls us nicely into my final thought for the day. Let's talk about the blockchain technology and its application to travel and leisure. I have a good friend of ours that Dux, who's planning a trip to Australia.
Okay.
Just the thought of having a trip like that on the blockchain just seems so easy. You've got multiple stops, you've got multiple destinations, hotels, houses, rentals, this, that, different currencies involved. You've got all of this, and to be able to manage that in one simple way on the blockchain, be given basically your itinerary, which you can manage, update along the way. It's like what we were discussing with the housing sale. Like, it's amazing.
Yeah, I think there are a lot of ways that blockchain technology helps with things like travel. And it starts, as you said, I mean, Dux is going from the US to Australia, right? So there's passports involved. And one of the first applications of blockchain technology that I read about that kind of got me excited is this idea of identity, right? Because there are many people in the world who are born in a place where there's no birth certificate, there's not a government official or a doctor or something to say you're an official person because you were born, and therefore they can't get a passport and travel, right? So that's one place it fits in, is this idea of identity. My identity is now tracked on chain instead of based on, my country, my passport or something like that. So that's the first place where we see the technology potentially being used. And then, as you said, I can use that and my wallet, I can pay for things. And look, I can then have my phone and, maybe a hard wallet or something, and I can be traveling the world and not go, I need to have 18 different currencies, or I need to be subject to whatever my credit card company is going to charge me to, for different currencies. I can have my money on chain, I can have my identity on chain, and I've got everything I need. And then it's a matter of, I connect to a certain travel site, There's one called Travala, I believe, that you're able to pay with crypto already. But there obviously there's the idea of I can track where I am. I can, keep track of what I'm doing. It can all be done through my wallet. I can collect like hotel rewards points, frequent flyer miles. All of those things can be tracked on chain through NFTs and everything, to where I'm not necessarily sharing as much information. There's not as much information being stored on centralized servers. Those are things we kind of like. So there are a lot of ways where blockchain technology is probably going to impact travel in very positive ways. It's not just for blockchain's sake. It's, again, things like identity, things like keeping track of my money, things like being able to prove, I show up at the hotel in Australia and I can go, bam, here I am. Here's here's my NFT that shows that I paid for my room already. And they go, instead of slapping a wristband on my wrist so that I can go to the pool with my kids, I just have it on my phone. They just scan it and bam, I'm in. Right. And those are little things that you go, well, that's not that much of an update on what we have now, but you make little iterations here and there and there. And the next thing you know, most of the way you live your life is just kind of stored and denoted on these public blockchains. And you go, well, maybe I don't want that. But in reality, everything you do now is stored on Amazon and Google and JP Morgan Chase servers anyway. So would you rather it there, or would you rather it on a public chain?
I don't know. I think this is all sounding very exciting. It's all going in the right direction.
I'm going to do blockchain tourism.
Blockchain tourism, I love it. And unfortunately, I can imagine Ducks walking around by the pool. He's going to have his binder with all of his papers for his trip, and he's going to be wondering, why didn't I put this on the blockchain and make my life easier? But
yep.
And then he'll drop his folder in the pool. It's going to happen, and he's going to be miserable trying to dry all these pieces of paper out, and that ruin his trip. So I'm going to tell him, make sure you get your stuff all done on the blockchain.
Yeah.
And as always, we went from one thing to another, and there's lots in the middle. I love
talking all over the place, and we ended with ducks by the pool somehow.
That's it. That's where we should end every conversation. Ducks by the pool.
Yeah.
But thanks as always for sharing your thoughts and your time. It's always an education. And speaking of education, Adam, I want to urge our viewers to check out your courses on digital assets and crypto education. There's a link down there, and you can obviously see the website. So don't forget to check it out. And also, don't forget to subscribe to Your Finance TV. There's a subscribe button and a like button. Pick them both. So go get it done. We'll be back next week and talk about everything to do with crypto and crypto assets and digital assets. And it's all about the crypto revolution. Until next time, good luck investing.